Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. Usually he speaks to us from Puerto Rico, but instead, today you're speaking to us from Minsk, Belarus. What's happening in Minsk to draw you there?
Well, I have family here, so it is an interesting little country. It's Eastern Europe's last communist dictatorship. So really, kind of like China, communist mostly in name. As long as you don't buck the powers that be, you're left mostly alone. But it's a cultural oddity, an interesting place, and one that I happen to have a lot of friends and family in. So I'm here for a visit.
What are the markets doing in Belarus?
There is a Belarusian stock market. I think it has 5 or 6 state-owned companies you can invest in if you want, but that's definitely not why I'm here.
Taking a look at the big boards here in North America, any relief for investors there, or does this look like we're in for a real bumpy ride?
Well, it depends on which investors you mean. I'm quite bearish on mainstream equities, but other than the short, sharp shock that happens when there's a meltdown that whacks everything, I think that's very good news for precious metals investors, who I know most of your listeners and my readers are or include themselves in that grouping. So it could be very interesting times. We saw in the big meltdowns in last month in October, we saw gold functioning as a safe haven asset. And I think very significantly, we saw gold and the dollar going up at the same time, which has been very rare over the last year. So I found these as very encouraging signs. That gold bugs don't need to be told that gold is a safe haven. But sometimes people want to get too clever and decide that thousands of years of history don't matter and gold is a barbaric relic and no longer should be considered a financial asset. So things like last month remind us, nope. Safe haven still works. We're seeing it a bit again this week with some of the turbulence on Wall Street. And the interesting thing for precious metals investors, I think, is the growing chorus of voices out there, not just mining guys or gold guys or, crazy anarchists like Doug Casey, but mainstream analysts, even banks are starting to say, well, this market on Wall Street has been in bull mode for a record length of time. It wouldn't be a surprise if a bear came back to visit us. So the turning of sentiment is quite significant. And maybe that's a bellwether of things to come for the betterment of precious metals investors.
What about palladium and platinum? Are they also in that group?
No. I'm glad you asked, because yes, they're precious, but I should further specify and say they're not really monetary metals. Despite some genius deciding that minting a $1 trillion platinum coin and using it to pay off the national debt would help the United States, I think most people don't take that seriously. And the thing is that nobody besides a metallurgist really can tell platinum or palladium from looking at them. They're silvery metals. And if you mistook silver for platinum, you end up on the wrong end of the stick and really hurting. Whereas gold is unmistakable. And silver is the poor man's gold that has been used. I guess it's the cheaper silvery metal like that. So platinum and palladium are not monetary metals. And they don't respond the same way that gold and silver do in times of crisis. And they don't they are largely consumed as industrial metals. They're used in catalytic converters, as we know. The story of China's boom being putting a lot of people into cars for the first time has been very good for palladium. The Dieselgate scares in Europe has been bad for platinum, and that's why palladium is more expensive now than platinum. But it just goes to show that these are primarily industrial metals. And if a downturn on Wall Street turns into broader economic turmoil and difficulties, that'll affect China. That will be bad for both metals, but more palladium. We might see palladium correct more than it has.
We'll have more with Lobo Tiggre right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, if it comes to gold, is this going to be the low point for the price and you should be getting it now because it's a bargain?
Yes and no. I think if the broader markets get scared and the needle swings more from greed towards fear, and we have, say, an orderly transition from the bull market going into bear mode, but doesn't really crash. We don't have another 2008 style waterfall event. We just see mainstream equities turning for the downwards for a while. I think we see gold picking up strength. It might take a while for the market to really believe it's true, but then when it does, it goes off with gusto and it could be off to the races. But there's also the possibility of another 2008 style crash or an even worse one, depending on just how shaky the house of cards is that's been propped up since the crash of 2008. I mean, all these really unprecedented things that have been done, the amount of money printing, the negative interest rate, what's been done to central banks' balance sheets. It's really spectacular. And if that unwinds in a disorderly way and we get a 2008 style or worse crash, then everything gets whacked, even the safe haven assets that shouldn't get whacked just because of the panic and people facing margin calls and therefore having to sell even the good stuff just because that's what gets a bid, or funds facing redemption, selling things whether they want to or not just because they have to. You get in a big market crash or crisis, everything takes a hit. But as we saw as recently as 2008, the things that shouldn't sell off are the first to rebound, and they rebound very sharply. Gold hit a multi-quarter low in 2008 during the crash, and it wasn't a U-shaped bottom; it's a very sharp V-shaped bottom, where gold came screaming back in December of 2008 and actually finished the year in the black. And the equities didn't take long to follow either. The better quality gold stocks followed very quickly. So I don't want to promise people that gold can't go lower, but I will say is if we do get a buying opportunity like that, I would take it with both hands.
If we see a market downturn, I guess the whole trick of the game here is to try to cash out in time to have enjoyed all the profits of a hot market over the past decade, and then have that cash on hand to snap up the Amazons, the Apples, the Facebooks once things bottom out.
Absolutely. If I was a mainstream investor now, I would absolutely be going to cash in a big way. And in fact, in my own portfolio, I recently did some trimming. I've been accumulating cash, and partly because I like gold stocks and I want to buy some more in the crash, if there is one. But the other thing that we haven't talked about yet, and was really interesting to see happening in these recent market fluctuations, is what's happened with the uranium stocks. Because uranium, as I'm sure you know and we've talked about, it continues rising. It's risen all year long. It did correct just a nickel a couple of weeks ago, but then came right back up, and it's now at a fresh multi-year high. But when the market meltdown happened on mainstream equities last month, the uranium stocks got whacked with everything else, even though at the same time uranium prices were going up. And then the market seemed to come to its senses a bit, realized, oh wait, uranium's going up. Stocks started recovering, And now this week we've seen more market turmoil, another big drop on Wall Street, and uranium stocks are down again, even though uranium itself has continued going up. I think that's the sort of the perfect storm, if you want to borrow the overused phrase there, but it's perfectly apt. Prices have gone down while value has gone up. That's the perfect combination for a speculator. So I'm looking to raise cash, and I'm very keen to deploy in the uranium space.
Well, I heard one analyst say right now at the extreme prices that were being asked for, it would take you 300 years to get back what you paid for your Amazon stock.
Well, so I actually didn't get around to answering that part of your question. I think if we do have a mainstream crash, a 2008 style event, I would be quite interested in some of these FAANG stocks, the former market darling, because the companies aren't going away. Amazon may face new competition, maybe, who knows, all kinds of things could happen. But it's still Amazon. It's still the 800-pound gorilla in that space, and it can generate a lot of value. Same with Apple. If Apple gets oversold, it's still an incredibly value-producing and valuable company. And at the right price, I'd be happy to own Apple stock.
We'll have more with Lobo Tiggre right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, the Bank of Japan now owns enough assets that it equals the GDP of Japan. Is that a dangerous situation for a central bank to be in? Because, for example, the European Central Bank owns 40% of the European GDP, the United States 20%, the Fed. Is it dangerous for Japan? Yeah, so is it dangerous for the bank?
I get the question, Jim.
Yeah.
It's one of those things, though, with Japan, because, they also have what looks like an insane debt-to-GDP ratio and have had that for decades now. The numbers in Japan would look like, screaming red lights and klaxons flashing all around in another economy would spell certain doom and disaster, one would have thought. But somehow Japan has managed to pull it off. So is it a concern? Of course it's a concern. Would I do that? No, of course I wouldn't do that. But I'd be cautious about saying, oh, this is the Trump of doom and this is the smoking gun or whatever metaphor you want to use. Because Japan has defied economic logic for a long time. And, they have a very cohesive and motivated culture and society. People there pull together. And it might be that they can do things there that wouldn't work in other economies.
What is the specific danger here with the central bank holding, for example, the majority of shares in Japan's 50 biggest companies?
Well, think about what you just said. If you're the majority owner, basically what you're saying is there is no private economy in Japan anymore. The government owns the economy. If it owns more than half the assets or half the companies, I'm being a little bit loose with my definitions here. But basically, the government has become the majority owner of the Japanese economy. That's the opposite of free markets. That's the opposite of unleashing the power of competition and entrepreneurship to pull a country forward. And history has shown a very dismal response to government-owned or government-controlled economies. So I wouldn't be very happy about that. But again, the Japanese have been able to break the rules before and seem to get away with it. So I think ultimately the piper gets paid. Bad decisions have to have their natural fruit, but I would be reluctant to say, it's going to crash now for sure.
Well, also Japan has experimented with negative or zero interest rates. The European Central Bank, negative interest rates. Switzerland, other countries like that. Has that worked out well for them?
Well, they do seem to have kicked the problems down the road, Jim. I mean, the great reckoning that so many of us thought was started by the crash of 2008 hasn't really happened. I remember talking about this with my friend and mentor, Doug Casey. For all these years, we've been like-minded in our outlook and all these crazy, stupid things the governments are doing. And then 2008 happened, and it seemed like that was it. This was the trigger. This was the big hit, and the piper would finally have to be paid. But that's not what happened. They did even crazier things. And I remember talking to Doug. It's like, Doug, is it possible this could work? I mean, can they really paper this over? And he didn't see it. He says, no, I think, storm is going to be even worse to come. But 10 years later, we have to say that they were able to kick it down the road, at least 10 years. So who knows how much longer they can kick it down the road. Personally, rather than trying to predict when doom and catastrophe is going to happen, I try to position myself so that I can make money if things more or less go the way they're going now, and also be positioned to be protected in the first place and potentially profit if there is a crash. And the precious metals help me with all of that.
If the banks are threatened again, would they start dipping into our bank accounts? Because the legislation is there in both Canada and the U.S. to do that, what they call a bail-in.
Yeah, right. Well, we certainly saw that with a very, extreme case that happened with Cyprus. And we saw the Europeans saying, yeah, no, that's okay. Or rather the bankers saying, that was a legitimate thing to do. So the writing's on the wall there. Your money is in the system isn't really yours. And I think that's yet again another reason for owning physical wealth in the form of gold and silver bullion. I don't want to sound like an anachronism here. But all these funny money bits, never mind the pieces of paper, that's bad enough. The pieces of paper that the government tells us is money. But you don't even bother with the pieces of paper. You just have ledger entries in a government-controlled system. Of course they can do whatever they want, and they will do it when they get desperate enough.
Sure, and right now the government guarantees your bank account up to $100,000. What if tomorrow they pass legislation and say it's $10,000?
Well, or what if they leave it? What if they guarantee your bank up to $1 million? But then they redefine what a dollar is. They can do that with a switch of the keyboard right now. And they could, they can print all they want to pay you off if they want. Remember, people like to think, Americans like to think that all these kinds of shenanigans only happen in those banana republics over there, right? Zimbabwe or Argentina or some such place. And only those governments would be so bad and stupid as to inflate their currencies that much or really steal from the people over a bank holiday. But remember, in the United States in 1933, the government seized the privately held bullion of the citizen. Suddenly owning gold, not jewelry, but gold bullion or gold as money became illegal, and you had to turn it to the government. That was in a day and age when the rights of the individual were far more sacrosanct than they are now. So if that could happen in the United States 80 years ago, don't imagine that it couldn't happen there now.
Well, it's just with the bank saying, oh, well, you're asset holders. But excuse me, if I'm an asset holder in a bank right now, how come I'm not being paid dividends?
Well, why'd you put your money in that bank, Jim? Personally, I save my money in gold and silver. I may sound like a broken record now, but the money that I keep in banks is minimal. I keep in there only what I need to pay a couple months' bills at most. And I have my investments and I have different contractual relationships with my brokerages and other firms. But when it comes to saving, it's either in real property or real money, though both are actually somewhat related in my view.
If you're a regular everyday person, probably doesn't have a lot of cash to throw around, if you want to save like that, would silver be a better bet than gold?
Well, I'm not sure that's quite a correct way to frame it anymore, because there are fractional coins. You can buy 1/10 of an ounce, U.S. mint coins and so on. There are smaller bits and ways of doing that. There's also the digital versions, though that's not quite the same as holding it in your hand. There are Kitco pool accounts and other tools. So it's not quite the way it used to be about gold. But even so, I think the average person can save up a couple $100 and buy themselves a 1/10 of an ounce coin. So, yeah, and gold doesn't tarnish, and so on. But most people think of silver as the poor man's gold. I don't see it quite that way. I think it's more convenient to store wealth in the smaller space that gold allows. But having some silver on hand for small change, as Doug likes to say, is always a useful thing.
Lobo, thank you so much for chatting with us.
Well, thank you, Jim. And, of course, folks are welcome to come to independentspeculator.com to find out exactly where I'm looking to put my money during what comes next.
I've been speaking with Lobo Tiggre from the independentspeculator.com. Usually he's speaking to us from Puerto Rico, but this time it's less than sunny Minsk, Belarus. If you have any questions for Lobo or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.